right. And we're live. This is a special weekly recap with the Defiant because we have tax experts in preparation for the tax deadline coming up next week. We have David Kemmerer from CoinLedger joining us and Antonia Islander from O2K. And myself, Camila, the founder of the Defiant, and YYC Trader, our head of news. So, welcome everyone joining us, and thank you so much to our wonderful panelists who are here to answer all of our tax questions.
Yeah, thanks for having us. It's exciting to be here now that tax day is right around the corner.
Exactly.
Greetings from the Netherlands.
Yay. Awesome. So for those of us listening, David here will be focusing on US tax regulation and law, and Antonia will be focusing on Europe, Canada, and kind of rest of the world. That's a lot, Antonia. A lot of pressure. But so let's get started with just a high level general framework for how crypto is treated tax wise. And David, maybe if you could start with again the U.S. focus, and then Antonia talk about how crypto is treated in tax wise in Europe and Canada.
Sure. Yeah, there'll be a lot of overlaps because it's pretty similarly treated across the board. But in the U.S., the IRS treats cryptocurrency as a form of property for taxes. And so other forms of property to draw comparisons are like stocks or real estate. And so really what this means is that when you sell or dispose of cryptocurrency, aka property, you're incurring capital gains or capital losses depending on how the value of that property has changed since you originally purchased it, right? So the simple example is that, let's say I bought Bitcoin for $1,000 and later on I sold it for $1,500. That $500 of capital gain is a form of taxable income to me. And so, that's how the IRS sees the assets. Now, there's, of course, always going to be gray areas given, how new of technology it is and DeFi and novel ways you can use cryptocurrencies. But at its core, it is a form of taxable income if you've generated income off of cryptocurrency.
Great, got it. And Antonia, is there any difference with how crypto is treated elsewhere?
Yeah, first of all, I want to clarify that I wasn't going to talk about Canada.
Oh, okay. Apologies for that. Okay. So Europe.
No, so in general, when you think about it on a very high level, there is no international taxation about international law about taxation. We have OECD CARF. OECD is in France. It's like the United Nations, but for the developed countries, they're issuing OECD CARF. That's just to exchange tax information between tax authorities. Then from the European Union, we have OECD. We have DACH 8, and that one is again to exchange information between the tax authorities. So nothing is said about how are we going to tax crypto. And I have spoken with both OECD and the European Union, and they're not planning to issue any international legislation saying we're going to tax it like that, we're going to classify it like that, because every country in the world has the right, because they have their own economy and it's different, and respectively they have their own tax system. They have the right to tax it as they please. America in general is very different from Europe because also we're a civil law jurisdiction from a corporate law perspective, and America is a common law jurisdiction. So a lot of things work differently. When we focus more on crypto, unfortunately, although we have the European Union, which is 27 countries, we have very different approach towards crypto. There is no national law issued at the moment. The first country that issued guidance how to do things is Germany. They did it last year. But for example, like even the way you should have your accounting and tax, they say just do it the regular way like you did it before. The only difference is there, for example, they say, could you please have wallets like when you're paying your salaries in crypto, have one wallet when you're doing your investments in crypto, have another wallet. So if you audit it, it's easy for the tax authorities to check it. And today I was planning to just really shortly give examples. Like if you see worldwide who is the worst about tax in crypto, that would be India. And who is the best? Like I would say that will be Portugal at the moment. But I have to say that the Netherlands and Germany are keeping up and they're much better for corporate taxpayers. So I don't know if David wants to say something or.
I think let's we have a bunch of questions for you guys on
Okay.
just like specific cases that people in our Twitter and Discord have dropped. So we have very hardcore degens among our readers and audience who want to know like what happens with NFTs and airdrops and staking and all those sorts of different use cases for crypto. But in general, I think like the very high level framework is that crypto across the world. I don't know if that's fair, but at least in the U.S. and many other countries, is treated as property, and so it's taxed based on the gains of that property. So the difference between when you bought crypto and when you sold it, and that difference is what's taxed across the board. Is that fair?
No. So you
Oh.
have 13 types of taxes that apply to crypto. So for example, you have capital gains, when you sell it for a profit. Usually if you're a corporate taxpayer, you can deduct those losses. But if you're a private investor, you can't. So unfortunately, in some Western European countries like the Netherlands or Switzerland, you have wealth tax. So for example, I as a person, if I have crypto and if I exceed 50,000 euros, or if with my fiscal partner being my husband or partner, I exceed 100,000, then everything after that is taxed with wealth tax. We also have sometimes even stamp duty tax, which is on donations in Portugal, for example. Or the most funny tax that we have is gambling tax, and that one is basically some countries decide, okay, investing in crypto is gambling, we're going to tax it with gambling tax. And that is really bad for taxpayers because if you're doing things in two different countries, you can have double taxation because gambling tax is not in tax treaties, which usually tax treaties give you relief with double taxation. So yeah, and you can have VAT as well. That usually happens to NFTs. So in the Netherlands, for example, if what you're selling is real, meaning like I don't know, the board apes or whatever, that will be with 21% VAT. But if you're using the NFT for gaming, then it won't be taxed with VAT because they don't see it as real profit.
Oh, interesting.
Yeah. So unfortunately, yeah, it's a little messy all over the world. And as I said, there are 13 types of taxes that might apply. So you have to be careful depending on the country.
Hey everyone, thanks for joining us. And yeah, I mean, taxes is something that, like you said, it's kind of similar around the world, but each country has its own kind of nuance, right? Even when it comes to capital gains, in the US, you have short term, long term. Here in Canada, you have just half of our capital gains are taxed. And I believe in some countries in Europe, if you hold stuff beyond a year, you don't get taxed at all. So, um, yeah. So thanks so much for joining us. And I think in terms of questions, we just want to start with a simple one, which is: are all crypto trades taxable? Which means, you're swapping for tokens like ETH and Bitcoin, whether it's NFTs, if you're sending stable coins between people, or gas payments, transaction fees, stuff like that. Are all crypto transactions treated the same for tax purposes, or are there differences?
First, you said, are all trades taxable? So, if you're disposing of cryptocurrency, you're going to incur a taxable event. And so you're going to realize, like I mentioned, either a gain or a loss on that disposal. But not all crypto transactions are taxable. So, if I send Bitcoin that I have in a Coinbase wallet or Ethereum, let's say, and I bring it to MetaMask, just that transfer, right? It's like moving money from my left pocket to my right pocket. I haven't disposed of it, and I haven't incurred a taxable event. So that transaction is not taxable. And so there's various transactions out there that aren't going to incur a taxable event. But as we know, many do. So hopefully that's somewhat helpful. They're not all taxable.
What about for stablecoins? Stablecoins represent such a huge percentage of volume in crypto. But when you're exchanging from stablecoin to stablecoin, or making a payment in stablecoins, that's usually you don't see a gain, even if you're trading that token. But like sometimes the price between stablecoins can differ, like for like pennies, like just they might be like very close to $1, but not exactly $1. Is that considered taxable, or is there like an exemption for stables?
Yeah. So in the US, unfortunately, it is treated similarly to, a crypto like Ethereum that is maybe fluctuating more in price. And this is really annoying because you hit it on the head. Stable coins are literally designed for commerce stability. And so they're much more commonly used in those types of functions. But anytime you're disposing of a stable coin, you're technically triggering a taxable event, and that needs to be reported on your taxes. Now, the good thing is you will not incur much gain or loss if the stablecoin is stable. Now, not all stablecoins have been stable, as we've seen in the past. And so, that can differ. But for USDC, right, if I spend it on goods or services, I've technically disposed of that asset, and I maybe have incurred a penny or two of gain or loss depending on the actual, fluctuation of that stable coin. Hopefully, my hope is in the future that legislation passes around treating stablecoins specifically differently than other forms of digital assets, because to your point, they are truly designed to be used differently.
Yeah, let's hope so. I mean, that's a huge headache.
Yeah, it's a barrier to just usage, right? Like if I had to report on an 8949 every time that I swiped my credit card in the US, right? Like that'd be really annoying. And so, hopefully we get legislation in the future, that's more pointed towards the different assets that there are in this ecosystem.
Thank you for telling me that. It's really surprising that in Europe it's different, because if you look at Bulgarian tax authorities, for example, surprisingly, Bulgaria has a lot of crypto. They will diligently tax you on exchanges. They will probably tax you also on stable coins like in America. But if you look at the Netherlands, they will tax crypto to fiat, but exchanges at the moment they won't, including stable coins they won't. If we look at Italy, Italy has ruled before in a court case that cryptocurrency is like foreign currency. So with foreign currency, you have profits or losses, and then that they're going to treat it like a foreign currency, and maybe you have some tax, but it won't be that much. In general, always everywhere in the world, when you convert from crypto to fiat, this is a taxable event. When you exchange crypto to crypto, it's not in every country a taxable event. And that's why I'm glad that there are software companies out there that they help you with like your reports monthly or yearly, because this is a nightmare for your accountant or for your tax lawyer if you have to account for your exchanges, you know. Airdrops in general are not taxable, but they're taxable when you dispose later from them. As the other speaker said, internationally, long-term capital gains, short-term capital gains are kind of everywhere in the world. You know, the 1 year. So yeah, it's really interesting to see that there are differences between America and Europe. Thank you, David, for telling me that.
I mean, now that you mentioned airdrops, we've had a couple of questions from our viewers about airdrops. So maybe we can jump to that. So yeah, it's just this very different beast from what everyone may be used to in traditional finance, right? You get kind of free money uh, from the sky. So yeah, there's a bunch of questions on this, like how are airdrops treated if they were dropped into your wallet versus having to claim them? Is there a difference? And how is the cost basis calculated? Like, should it be zero because you didn't pay anything for them, or do you have to go back to the date when you got that crypto and see how much the token was worth at the time? Or how, I mean, what's the process for dealing with airdrops?
Mhm. Yeah, so this is where I think it's going to be different country to country. In the U.S., the IRS has explained that airdrops are taxable income at the fair market value at the time that you have ownership over the airdrop. For example, I received the ENS airdrop, a year and a half ago. And that airdrop for me was worth about $3,500 when it hit my wallet. And so I would pick up $3,500 of ordinary income for that amount of ENS. And then that's my basis in those tokens moving forward. And so, if I dispose of them months later, let's say for less than $3,500, that's a capital loss, right? That gets reported on my tax return. If they've gone up in value and I dispose of them, that would be a capital gain. So that's how it works here in the US. But as Antonia mentioned, I think it is different in other countries.
And does it make a difference between, having something dropped into your wallet, because you're not actively going and claiming or like doing anything to get that asset in your wallet, or versus, the traditional airdrop where, you have a claim page, you actually push through a transaction to get your tokens?
Mm-hmm. So technically, no, but as you guys know, there's a lot of spam token airdrops that are worth really nothing when they are in your wallet. And so you haven't really realized any income in those events. But it's when you have dominion and control over the asset. So it doesn't matter if you claimed it through a claim function or if it truly was dropped to your wallet. It's still taxable income at the fair market value of the tokens, the time that you have dominion and control over the assets, which otherwise just means when you have control over it, meaning you have the ability to potentially move them around, leverage the tokens, etc. So the actual function, it's a good question. No, it's still going to be treated as the same type of income.
Interesting, because I think this might have a lot of implications in NFTs, because you get airdropped a ton of NFTs all the time. I mean, like you said, most of them are trash, but some of them are sometimes worth something, right? Even if it's like 0.05 ETH, 0.1 ETH, something like that. So I think this is going to create, well, at least for me, a lot of headaches to go back and figure out what they were worth on the day, because historical floor prices for collections, especially ones that don't have much volume, are spotty at best, right? So
Correct.
so how
So
do you
this
advise
is an
someone to
area
deal
where I
with that?
would advise you speak with, a tax professional on your side, because, I can't give you specific advice. Everyone's situations are different. If you have hundreds and hundreds of airdropped NFTs that, to your point, have some value, you're going to probably want to just talk to a professional about that and get their opinion on your specific case, because people's scenarios are different, and there is still some gray area here, even though the guidance, you could say, is black and white in the US, saying, hey, airdrops are taxable income at the fair market value. There's so much nuance that comes with, well, what about in this or this case? And so that's where I'd always recommend someone to speak with a tax professional. And we have a whole list of tax professionals that have been vetted on our directory at CoinLedger, so you can go check those out and get in touch with those people.
Awesome. Thank you.
Yeah, David is right. NFTs are very tricky. To value them, you have special formulas. And then in general, if we look at VAT, which we have in Europe, which is like a sales tax, I think, in America, usually the marketplace is responsible for calculating the VAT and charging the VAT. But then the nightmare starts when you have NFTs that are traded by teenagers who are like a few cents or $1, and then usually there are thresholds. Like in Germany, if your crypto holding is below 600 euros, you will not get taxed, and that's the same in India. It's against 50,000 rupees, which is 600 euros, kind of. But in general, for NFTs, you have to, if they have significant value, you have to make special valuation, and then you need a special kind of tax lawyer even to do that for you, like David said.
Yeah, with NFTs, we also deal with the illiquidity factor, right? Because just because something has a floor price of X doesn't mean you can sell it at that price, right? So, yeah, like you said, a lot of nuance comes in.
Mm-hmm. Definitely.
And I forgot to mention other transactions. Everywhere in the world, when you receive crypto as a salary, even as a freelancer, that's taxable.
So would it be different? How would it be different to receive your salary in crypto from fiat?
So in the US, there's technically not a difference, right? You're being paid, right, some form of valuable thing, and you're incurring income. And so here in the US, let's say I do some media appearance and I'm paid in crypto, okay, and I'm paid 1 Ethereum for that service. In the US, I will have incurred income at the fair market value of ETH at that time. So let's say it was worth $2,000. I'd pick up $2,000 of income, just as if I was paid $2,000 in US dollars, right? It's still a form of income. I'm going to report that on my taxes. The percent of tax that I'll pay is based on my personal income tax bracket. So I look at all my income for the year, and that paints of what brackets I fall into. And that's the actual percentage I'll pay on that income. So that's pretty much how it works. Is, again, you look at what was the fair market value of the tokens at the time that they were paid to me, and that's the amount of income that I pick up on my tax return.
Got it. Is it the same in the rest of the in Europe?
Yeah, the nightmare starts when you have to pay the tax, because tax authorities don't accept crypto except Argentina, I think Mendoza region, and one of the cantons in Switzerland. But even the Switzerland canton accepts only Ethereum and Bitcoin at the moment. So for the rest, when you get your salary, you have to account it somewhere, or you have to immediately, monthly, take part of the crypto, settle it into cash, and pay with cash. That's the logistical nightmare.
So you
Right.
might
And this is a
yeah.
very important thing to actually highlight, because as we know, cryptocurrencies are volatile, but you're incurring income at the value of the asset at the time it was paid out. So this is where people can get into trouble. Let's say, again, I last year or maybe the year before was doing services for some company. I was being paid in Ethereum or some other token. And when I received the token, let's say that it was worth $1,000. But next year, when I actually have to pay tax on that income, let's say that token is worth $100, right? Now, my tax bill, I'm still taxed at when I received it, which is when it was worth $1,000. But the asset has gone down so much that I might not even have enough to cover the tax bill of it. And so people, would be wise, and they should, as if they're incurring income or salaries in crypto or airdrops, anything that's like income at the time of receipt, you should set aside and settle some to cash to be able to cover the tax bill that is relevant at the time that it's received. This is where I've seen some sad stories. People can get into tough situations given the volatility of the markets.
Oh wow, yeah, that sounds horrible. And also, it could be the inverse, where you have to sell crypto to pay for your taxes, but you sell at a higher price, so you'll be having to pay for the gains on that the following year.
Correct. But keep in mind, you're only paying on like the delta. So let's just use a 1 Ethereum example. Let's say I was paid 1 Ethereum and it was worth $2,000. Okay. And I pick up that amount of income. So $2,000 reported on my taxes. And then to cover the bill, let's say I sell some amount of that Ethereum. But when I sell it, to your point, the Ethereum is worth, let's say, $3,000. Let's just say I sold the whole Ethereum. Okay. So I'd pick up $1,000 additionally of capital gain. So now I have essentially $3,000 of taxable income activity, right? I received the Ethereum when it was $2,000. I sold it for $3,000. And, I have $1,000 of capital gains and $2,000 of ordinary income. So it's not like you're getting taxed on the same income twice. It's just on that delta.
Got it. Yeah. Somebody here in the comments was asking, what's the best country to cash out on crypto?
I don't think that's actually relevant. Yeah, go ahead.
Well, I always get that question. Everyone goes to Dubai, or Portugal, but Dubai was recently put on a FATF and European Union blacklist. So you have really big problems with your bank accounts trying to do things after that. In general, if you're an American citizen, you're doomed forever with your American passport. It doesn't matter where you go, you have to report to your tax authorities. And that applies to European citizens. It doesn't matter where you go. Depending on how long you live, like if you lived in more than 183 days in a country, then you're a tax resident there. Still, sometimes you have to file tax returns in your own country because you have real estate or whatever. But in general, you should be taxed in the country where you're residing more than 183 days. So if you just go to Portugal and you cash out on your crypto, it's not going to cut it, So, but we see that like that country also, I think Malta really is trying to lure digital nomads. So digital nomads that can work from everywhere, go there, go in Malta, go in Dubai, and they usually cash out on their crypto there. So I don't know if that answers the question.
Yeah, no, for sure. I think there are so many digital nomads in crypto, people who can work remotely in DAO. So I think with, so many traders having just like the flexibility to live wherever, that tax question becomes even more relevant. Somebody might just live wherever it's best tax wise to hold crypto and to trade crypto. Yeah. Let's see. We had a few questions from our comments. Why we see? Do you wanna pick one?
Yeah, sure. This was an interesting one, and I think that it's a scenario that we all have encountered if you're active in crypto. If you send crypto to the wrong address or a bad address, which you can't then recover, how do you account for that loss?
So in the US, my recommendation would be to speak with a tax advisor, because it can be a gray area as to whether you can or can't actually claim that as a loss on your tax return. There's rules that have been disallowed in the past around casualty losses. And, if you essentially just made a mistake, and you might not be able to write that off on your taxes. And so I would speak to someone about your specific scenario, because it can, again, be very nuanced here.
Interesting.
I agree with David. You have to check per country. Most of them will not allow you, unfortunately. If you lost your keys, also they say, well, we don't care.
Right.
I think only England was nice enough, and they say, okay, if you can really prove to us that you were hacked, that you lost your keys, or that you sent it by mistake, then we will allow you. But you really have to check per country. I cannot remember all this by heart, because I have gathered knowledge about 70 countries, and it's really difficult for me to remember everything by heart.
Yeah, in the US, it's mostly not. You're not going to be able to do
Okay.
it.
Okay.
But again, I would talk to someone, because there are nuances here, depending on what was happening underlying.
And then I wanted to address the topic of staking, which very newsworthy right now with Ethereum. So there are like different things to consider with staking. Like first is staking itself considered a purchase, even if you don't receive any tokens in exchange. Just placing your ETH in the Ethereum network, staking it. How is that treated tax wise? And then how is it treated if you do receive a token in exchange? Like if you're using Lido or any other kind of liquid staking provider, is that exchange of ETH for ST-ETH or RETH or any of the liquid staking tokens taxed? And then I'd love to ask about staking rewards as well, but maybe let's just start with that kind of initial staking transaction.
So it really does depend protocol by protocol, the mechanism of staking, as you mentioned. If you are disposing of a token and you're receiving a different token in return, the conservative treatment is to recognize a disposal event and a taxable event, and thus you would recognize gain or loss on the disposal of the Ethereum when you got a different token in return. Now, the IRS has not come out and said, hey, this is how Lido is treated, right? So you do have to, tax professionals are making inferences here. And so it's always wise, and you can tell this is a repeating theme, but to talk to someone on your specific use case. But I know tax lawyers who, will say, oh, just staking your ETH is not a disposal and thus is not a taxable event. I also know some who say it is. And so it's really a spectrum here. It's some gray area as to what constitutes a disposal. That's the thing to look for, is am I actually disposing of my asset here and getting a new one in return? The easier side is on the staking rewards side. How is that taxed? And so I can talk about that too, but that's very simply, it's the exact same thing as if you're receiving, as you mentioned, crypto for goods or for services you rendered, right? If you're being paid in crypto, it's the same. It's a form of income in the US. Just like if you are mining Bitcoin, if you're receiving Bitcoin as rewards, you're taxed at the fair market value of the Bitcoin when it hits your wallet. Same with on the Ethereum side. When you have dominion and control, meaning you have possession over the staking rewards, that's when you're going to realize income on those assets. And that becomes, again, your basis in them moving forward. So that's at the high level how it works.
So does that mean it actually makes more sense? Like, for example, if someone bought ETH like very early on, right? So their cost basis would be extremely low. So would that mean it makes more sense for them to stake directly rather than through Lido or someone? Because in Lido's case, at least, you are getting a new asset, right? You're giving away your ETH, you're getting staked ETH. So that would definitely be considered a disposal in the US, right? But if you stake directly, like you said, there's a gray area. So you could potentially get away with not considering it a disposal, I guess.
Correct. And that's exactly what the questions that I would definitely ask, your tax attorney that you're consulting with. Our hands are a little bit tied. We can't give specific tax advice on like calls like this. We can speak in the high levels and what the rules are, but for everyone, there's these nuanced circumstances. But your generalization there was, yes, accurate. And it depends. Like, does the person, not want to incur a disposal event, because that would influence how they want to go about doing staking?
I mean, absolutely. I'm sure most people who want to stake their ETH don't want to have it considered a sale, right? Because they're still, for all practical purposes, you're still holding your ETH, right? You've just, I don't know. To me, it's like sticking your USD in a savings account, right? That doesn't, I mean, you pay tax on the interest, but not because you put the money in there, right? Usually.
Right.
In other countries, mostly, I think at the moment is viewed as like you're giving a loan to someone. You cannot use that asset, and you're just giving it to someone else. And then when you're getting a reward, which is like an interest rate, then you get taxed on the interest rate on the reward. And I will give you an example with the King of England. He didn't get taxed on all of the real estate he got from his mother because realistically, he cannot sell it. He owns it, but he cannot make use of it. And that's, I think, the same with staking. So I think internationally, only your reward will be taxed. And then when you get it back and when you dispose it, if you dispose it into cash or whatever, then you will have capital gains and stuff like that. But at the moment when you lock it, in general, it shouldn't be taxed. And I just wanted to, how to say that? To say to people that, yes, we should report our crypto. And like, for example, the Dutch tax authorities are so smart that the moment you have made a SEPA payment or something like that through your bank account to Banksa or Binance or whatever, they will immediately put it in their systems and they will ask to report. But in general, if you see, there was a report a few days ago, only 2 to 4% actually of people report their crypto. And tax authorities still didn't catch up on that. So it's not like, I mean, you should report your crypto, but you should always first check what's the rules locally. And if you're not sure, you can actually write them a letter before you file your tax return. Because some countries still don't have even tax lawyers who are specialized in crypto. And for example, in Germany, if you didn't file your tax return correctly, and it was because there was not enough information from the tax authority available, then in general, you should not get fined. And I think this should apply in every country at the moment for crypto, because there is not enough information from tax authorities. What are we going to do with that? So then respectively, they should not be too harsh on taxpayers, because if tax authorities don't know what to do with it, how are taxpayers supposed to know what to do with it? So, yeah. But in general, you should report your crypto. Yeah.
There's a question here in the comments that asks, are there any regulations regarding non-KYC crypto? So more in general, is there any difference between crypto in centralized exchanges? Like you mentioned, in Netherlands, authorities know when you make a purchase in Binance or in a centralized exchange. Is there any difference from making trades via MetaMask, via in DeFi?
In the US, the answer is no. Any income you realize, whether it's KYC'd or not, is reportable. It needs to be reported on your taxes. The KYC aspect is just an enforcement mechanism, right? That's how the authorities are trying to, again, track down, enforce the law. But whether you're trading on Qcoin with no KYC or MetaMask or Coinbase, it's all the same. The rules apply similarly to everything. And so if you're realizing income through any of the means we've discussed, that needs to be reported on your taxes legally.
Makes sense. Is it the same in Europe?
It is the same everywhere. The question is that, realistically speaking, centralized exchanges are also like reporting to Chainalysis. So, and usually tax authorities have Chainalysis, and that's why they check for money laundering and things like that, and they do the audits. And the thing is that in DeFi, it's really difficult for tax authorities to monitor that. In general, they can like reach out to DeFi platforms and ask them about information. But even the European Commission last year said, it's really difficult for us to regulate DeFi. If you have ideas, literally email us. So I think 3 days ago, France issued kind of a report what they're thinking about doing with it. But yeah, the easiest way tax authorities check things out through centralized exchanges, and DeFi is more difficult. In conclusion,
and just a quick follow-up on that. The same viewer asked, isn't the EU going to regulate unhosted wallets, and could someone be compelled to provide transaction history?
I think at the moment they're not regulated, but there were recently news about Mika from like yesterday that I still haven't read. Sorry about that. So I have to answer that question later on. At the moment they're not.
All right. So coming back to something that's very popular with DeFi users, but an absolute nightmare for tax purposes is yield farming, right? Let's say you provide liquidity on Uniswap. You start with 10 ETH and let's say an equivalent amount of USDC. You add liquidity and you leave your position running for a few months. You're claiming fees in the meantime. And for example, if you started this position at the beginning of the year and you want to exit today because ETH is up, you'd most likely exit with a lot more USDC than ETH, right? Because that's how Uniswap works. So what is the best way to deal with this from a tax perspective?
The best way, as in just how it works?
Yes.
Again, on the US's side, conservatively, if you're swapping one token for another, which is technically the mechanism behind Uniswap, right? You're swapping tokens for an LP token. You're technically triggering a disposal event and a taxable event. So then, let's say I put in $1,000 of ETH and $1,000 of USDC to the pool. Maybe my ETH has accrued in value, so I book some capital gains there, and I receive this LP token. Then, as you mentioned, market making happens over the months, and fees accrue to that position, and the position accrues some value, and I cash it back out for $1,500 worth of ETH and $2,000 worth of USDC, then that's a capital gain from the original 1,000, right? And so you'd book gains for both of those. And that's essentially how it works, right? Is, you're trading 2 tokens for 1, that becomes the basis in the 1 token. You trade 1 token back for 2. What's the value of those? That's the gain that you're going to realize.
Okay, so you assign the cost basis to the LP token itself once you swap your tokens.
Exactly.
All right, interesting. Thank you.
We had a couple of questions in our Discord and Twitter from people who are just overwhelmed with the number of transactions they have. Like if you're doing things like trading in NFTs or playing blockchain games where it's like just like many, like thousands of swaps. How I mean, what advice do you give to those crypto holders? How to deal with just like thousands and thousands of transactions?
Yeah. I mean, I would say you should use a platform like CoinLedger that can import those thousands and thousands of transactions and automatically calculate the gains, losses, and income associated with them. Now, our pricing, of course, is tiered based on transaction volume. So quickly you can, get into some of our higher pricing tiers. That's something to be aware of, but that is just the reality today. So what would I say to that person? I would just be generally aware. You can try before you buy services like CoinLedger, so you can import everything to CoinLedger, be aware of how many transactions whatever you're doing is incurring before you ever have to spend any money. And so at least then you're aware of the tax implications and potentially the complexity that you're creating by doing some of this stuff. On our side, I can't speak for everyone too, is we're always looking for ways to make this more efficient, more cost effective for people. And so in the future, if we don't believe our value proposition is tied to just transaction volumes, and maybe we want to make an exception of like, hey, if you're playing this blockchain game, that's not going to count against your tiers as heavily as like just trades on Coinbase, right? We're already working with stuff like that so that we can be more accommodating for some people. But right now, the best, we want to tie our price to the value we create. And so for someone who has thousands and thousands of trades, software is going to be more valuable to them than if they just had 10 trades, because they could calculate that manually. So that's always what we're trying to play with. I'm very open to feedback of people, how they want to see our platforms like ours evolve in the future. But that is just a reality today, is if you're leveraging DeFi, games, other forms of on-chain activity, and you're incurring thousands of transactions, just as the tax law is written today, technically each one of those could be incurring, small amounts of income, and that needs to be reported. So I think the first and foremost thing is just be aware of it, and then you can, decide how you want to take action from there.
Yeah, I think an offering that takes into account the value of transactions rather than just the number would do really well, because like there are tons of people like this user, playing these games. I think, what did they say? Does the IRS really want to know that I traded NFT wood for cabbage for like half a cent, right? So,
yeah, I like that.
And yeah, these transactions add up.
I think that's a good idea. It's a good amount of more software to build into our pricing mechanisms, right? Because we have to be looking at the value of these transactions before we can give you a quote, which, as you know, brings up all these other problems, because not all these tokens have liquid markets. A lot of them aren't worth anything, or it's impossible for us to assign values to NFTs right now. There's a lot of software tooling that's being worked on to solve that, but it does introduce complexity. But I like the idea.
Awesome.
I just wanted to add here, like I mentioned before, the Netherlands being very practical and saying if it's a game, we're not going to put VAT on it. But from a legal perspective, everywhere in the world, and this is the OECD guidance, you have crypto which is classified as payment tokens, utility tokens, and security tokens. and hybrid tokens are the stable coins. So payment tokens are like Bitcoin, Ethereum, whatever. They're like normal currency. When you have utility tokens, which is what you just said, like just in the environment of the game or in the environment of, I don't know, the DAO or whatever, then in general, utility tokens are not taxed because if you only use it in the environment that you're in, they don't have monetary value for the outside world. It's like your, I don't know, air miles on your airplane and things like that. And to come back on the other question about unhosted wallets, as I said, I have to check what the European Union is going to decide on that. But in general, at the moment, you have the travel rule, which there's also software for. And then like the Netherlands, I think Liechtenstein and Germany has the travel rule. When you make a transaction above 1,000 euros, the exchanges and the bank or all of the intermediaries involved exchange automatically information, your name, your wallet, your address. And FATF, I think in general, was saying that all amount above 10,000 euros should be from unhosted wallets investigated. So I think even if regulation comes, it will be for transactions above $1,000 or 1,000 euros.
Awesome, super helpful. So I think we're coming up to the end of the live stream, and this has been this has been great. Thanks for answering all of our questions and questions from our audience and viewers. Last chance, those of you following, to drop your questions in, and we can squeeze them into the end of the live stream. But to start wrapping up, I just wanted to get your more just general thoughts on what you guys think is needed in terms of tax regulation. You both have said we're pretty early in setting guidelines for crypto. What do you think is needed if you had just like your top priority on what needs to be done?
Mm-hmm. Sure. On my side, I've kind of mentioned this before, but other countries are actually doing this. The US has not done this, but we need more nuance on the assets themselves. So like stable coins are different than, cryptocurrencies like Bitcoin and Ethereum, and actually having more nuanced categorizations and tax treatments of those different assets needs to happen so that the space can advance forward more in the US. Like we said, spending stable coins shouldn't trigger a taxable event that needs to be reported every time on your 8949. That's a big one for me, without opening too big of a can of worms. But on the enforcement side, so this has less to do with taxpayers themselves, but how are governments actually enforcing this? They're trying to enforce 1099 information reporting here in the US, similarly to how it exists within the world of stocks. And that fundamentally doesn't copy paste one-to-one to the world of digital assets. And I've written a lot about this, with other media outlets, so you can find some of my writing online. But I think that needs to be thought about a little bit harder instead of just forcing a square peg in a round hole. It's going to create a lot of pain and burden as exchanges start reporting 1099s for all of this activity. That ultimately doesn't help the taxpayer figure out how much gains, losses, or income they have. So I think there's a lot. It's iterative, and it just takes private public conversations with governments to try to get to places that's usable and good for the industry. So those are my 2 cents.
Awesome. How about you, Antonia?
Thank you, David. I completely agree with David. And just to add, I think tax authorities should take the time to inform their taxpayers how to file their taxes. And also, when there is court case or a decision, it doesn't have to be a court case, they have to make it public, like on that asset, because they say, oh, it's a case-by-case scenario every time. Okay, that's great. So then give us those cases. What did you do with that asset? How did you tax it? How did you classify it? I would like to see that. And that's why Also, we're organizing on 10th of July a conference where I'm gathering tax authorities from all over the world, OECD and businesses, so they can sit down and talk, okay, these are the problems that we have. Can we have kind of a international understanding how we're going to proceed? So I would like to see the tax authorities educating taxpayers and really making information public about that. Yeah.
Yeah, I think that's what we're waiting for on in all levels in crypto, just more clarity around taxes, regulation, just how to participate in this new economy, basically. But anyways, you've made it really clear for how to file taxes next week on all our crypto. So really, thanks so much, David and Antonia, and thanks again to everyone joining us. This has been great.
Yeah, thanks for having. And I will say we're gonna run a 20% off code with Defiant, so just DEFIANT. We'll get you 20% off any CoinLedger plan for the next few days if anyone wants to test out the platform.
Oh, awesome. Yeah, everyone, you should go ahead and take advantage of that. Great. So thanks everyone.
Thank you,
Have a
Camilla.
nice weekend, everyone.
Yes,
Bye.
you as well. Thank you.
Bye bye.